Well, hello. Just want to say welcome to our viewers today. We're starting the first podcast of a series of informational real estate podcasts. Today, we're going to be talking about building trust with institutional capital. I'm Glenn Veronic, the founder and managing director of Preceptis Capital. We are a vertically integrated general partnership that partners with family offices and institutional investors to acquire large-scale, value-add multifamily properties in 5 high-volume markets within the United States. I'm joined today by my esteemed co-host, Gary Baumann from ARCTRUST. And Gary, I'll let you introduce yourself.
Good morning, Glenn, and thanks for having me today. My name's Gary Baumann. I am the CEO of the ARCTRUST group of companies, founded in 1985. This year we celebrate 40 years as a real estate investment platform. We sponsor and operate a series of REITs. We undertake ground-up development. We raise and deploy capital in direct ownership, limited partnership, preferred equity, mezzanine equity, first mortgage, and as we say, pretty much anywhere in the capital stack. It's a pleasure to be here.
It's great to have you. You know, Gary, in a world where capital moves very fast and trust very slow, today we want to talk about what it takes to really earn and keep the confidence of institutional investors. From private REITs like yourself that are very seasoned to emerging general partnerships like ours, it's really important to have that trust with those institutional capital providers. So let's dive into some of the systems and relationships and values that support those long-term capital relationships. And so maybe it would be good to just hear from you, your thoughts about why trust is the currency of capital in today's market.
You know, it's probably the most important currency in today's capital market. Information moves quickly. The internet has given us almost instant and complete access to the facts that surround a transaction. But no matter what, Glenn, you can't know everything. As an LP looking to invest in a deal, no matter how many MBAs you take out of business school and equip with a screen and a terminal and give them access to the internet, they're not going to know everything that a GP knows about a deal. The space between what you know as the investor and what you know as the GP is trust. That's how you form the relationship, and you come to expect that what a GP says they're going to do, they do. The things they haven't told you are covered in the deal.
Yeah, that makes a lot of sense. And I think, you know, we, from a general partnership perspective, we think about the trust building with the investor base from the very beginning, all the way from the starting of the underwriting, work. We look at all of the components of the underwriting as a way to build trust with that investor, a way to help them understand the deal, a way to help them really get confidence that you've thought about all of the components of the deal that will become, evident as you start to acquire properties and start to hold those properties and perform the renovations that we do on properties. And so that trust building starts at the very beginning of the process, not when you close. And so we're finding that that's a really important piece of the equation.
Absolutely. And look, we've been doing this for 4 decades. And every disclosure, Glenn, starts out with past performance isn't an indication of future returns.
That's right.
Right? But the first question everybody asks when they form their opinion on trust is, what's your track record? Right? Why should I trust you? What have you done in the past? And we all have one, right? We lead with our track record. But if there was anything I could say to the LP, track record isn't everything, right? How deep is the bench? How broad is your expertise in the asset class that you're looking at investing in? And then, as you just pointed out, you're going to incrementally build trust as you go through the deal analysis and the underwriting. Each element, each layer you add to your thesis, to your calculus and your conclusion is going to tell that investor, I'm doing the right things and I'm doing things right. And
That's right.
then you're going to get to, that's how you get to yes.
That makes a lot of sense. I think that, that speaks a little bit to me too about how we think about transparency. I was a public company chief financial officer for 2 different public companies. And I built an entire staff, an entire operation around transparency and how you were going to reflect that with your financial reporting, as well as all of the controls around the financial reporting. And when I think about transparency in these types of deals with institutional capital, I think it's as much or more transparency than what I was doing in the public market. And so how does ARCTRUST think about transparency with the institutional capital?
The public market defines disclosure, right? They tell you what you have to do. I'm public, I'm registered, I'm regulated, I'm going to do what I have to do, right? But in the private markets, there aren't necessarily fence posts around that field, right? It's what we make of it. We have to build the relationship, we have to build the trust, and we're going to do that with communication. We can all accept good news. We can all accept bad news, but no news is unacceptable. The way we build a relationship with our investor base is constant communication. And it's interesting, we use the word transparency a lot, Glenn, because it creates the image that if there's a clear space between the investor and the deal, they'll be able to see into it and they'll be able to see what the facts are. But it removes from the GP the concept that you need to be honest. I don't have to be honest. It's not about my intent, Glenn. I'm being transparent. You can see in. I want to challenge that concept a little bit. You know it as a GP. I know it as a GP. I know it as an LP when I'm investing. That what we're really after in building trust is honesty. Communicate often and communicate the facts, and we're going to be able to deal with them as we go forward, right? Character isn't built when things go well. Character is built when things don't go so well.
That's right.
And it's certainly displayed when things don't go so well. So transparency seems to be, it's the word in our industry. It's the word in all industry, all investing. We want transparency. I say, let's communicate often and communicate with honesty, and that'll help us build trust.
I think you raise a really great point. It doesn't abdicate the need for honesty just because you have transparency. I think what we have found to be the case is that when something goes wrong, as it always does, having the ability to communicate what is it that went wrong, having the ability to talk about what are we going to do about it, how are we going to fix it if it's a fixable type of event, which most things are, and then how are we going to when we finally bring resolution, be able to take that back to the investor capital and put that in front of them to show them that we are building further credibility because something went wrong. We told you what happened. We told you what we're doing about it and how we're going to correct it and when we're going to correct it. And now we're telling you it's corrected. I think that just raises the level of credibility across the board for the investor base when they know that you will communicate when there are problems. You will communicate how you're going to deal with those problems because there are always problems in every single deal. There's not a flawless deal out there.
That's right. And that goes right back to your track record, right? It speaks to your depth of relationships in the market, the duration of your relationships in the market. And anytime you're going to build trust with an investor or an investor needs to build trust with a general partner, you need to be able to refer to those things, right? For us, it's 40 years of relationships in the market with major brokers, with bankers, with real estate owners, right? we can point to all of those relationships with a potential new investor or a potential new general partner, and we can show them examples of where we've been communicative, transparent. We've been problem solvers, right? Not just opportunity takers. We're all in the business to take advantage of opportunity, right? We're always seeking the next opportunity, right? But how do you fashion that opportunity into return? And I know we're gonna spend some time on that maybe in another episode of this podcast series. But it's the longevity in the business. It's the record of your ability to solve problems, not just create opportunities. And it's that history of communication, how often, how complete. That goes to the transparency and building trust.
Absolutely. One other area that this brings up for me, Gary, is the idea of discipline. Some of the mistakes that I see general partnerships make, and I don't know how you see it from the REIT perspective, but I see that general partners will chase deals. They don't have their buy box really, the framework really well laid out, and they lack discipline to stay in the buy box even if they did at some point. And I think that in my mind, having that disciplined approach to what types of properties, what types of markets, what types of situations are you willing to go chase from an opportunity perspective, versus having a very disciplined approach and you don't touch anything that doesn't fit that framework. I think that continues or provides a level of trust for investors' capital to know that this team is disciplined. They know what they're looking for. They're not bringing junk to the table. They're staying within their disciplined framework. How do you see that? Do you come across that much in the opportunities that you work in?
We do. It's interesting. If a GP comes to us and they're not an unapologetic optimist, I question whether they have the entrepreneurial spirit to create return, right? GPs I think of as the generator of alpha. Your job.
That's a good way to say it.
Your job is to buy low, sell high. Your job is to start with a great idea, and then I have an expression. If you're talking to a good GP when they tell you their idea, and the next words out of their mouth, Glenn, are, and then we take over the world.
Right.
They should want to do that. And the relationship between the GP and the LP in the underwriting process, in the deal review, in the structuring of the deal, that's where trust and confidence is built. And a good GP will accept the discipline offered by the limited partner and their investor base. If you're being a good LP, you're refining the model, you're altering the thesis, you're working in an iterative process with a GP to constrain that energy that's pulled them outside of the buy box and say, is there a way to put it back in the box and seal the deal, right? If there isn't, you move on. But if there is, this is where, as an LP, as the REIT, we can bring flexibility, creativity, because not every deal's down the middle of the fairway. Right? We have said to each other in the past, it's hard work. If it was easy, everyone would be doing it, right?
That's right.
But they're not, and we are. And it's because we can form that relationship with the GP, we can make each other better in our process. But I kind of look for a GP that comes with a mind a little outside the box.
Right. That makes a lot of sense. And I think that those types of frameworks and discipline will really drive a lot of trust with the investor capital and give you the ability to have more latitude about the types of opportunities you want to get yourself into. And I think that makes a lot of sense for helping to build that. I also think a little bit about the execution at all stages. I see GPs make mistakes around, we just got to get to the close of the deal. And really, that's the start of the deal. The close is only the beginning. There are so many factors that come into play after that, and having the ability to execute all along the path of from the disciplined approach to underwriting all the way through to doing the final close on the acquisition, and then what's next, doing the transition to the property management, moving through renovations with as flawlessly as you can and in as timely of a basis as you can. And then also thinking about and preparing for the exit on the back end and where the returns will be maximized. These are all execution points that require pieces of discipline all along the path. And I'm curious to know your thoughts on how you think that relates to the trust and the confidence that the institutional capital will have.
So I'm going to turn it around a little on you, because I'm going to ask you my answer is going to start by asking you a question, which is, do we as investors vertically integrate out of efficiency or necessity?
That's a great question.
Because the GP, as you said, is focused on getting to closing, right? Closing for the LP, right? Closing for us as a REIT or the investor is what I call day one.
That's right.
Right? It's day one. And my expression with my team in the office is, what's the day one math? Day one, we know what it costs, what our cost of execution was, our transaction costs. We know what our annual budget for operating should be. It's all written down in accurate spreadsheets. It's booked to the general ledger, right? And by day three, all hell breaks loose.
That's right.
But how does the team keep continuity in execution from day one, right? You closed on the day one math. How does the team create continuity through the life cycle of that deal and maintain that trust and confidence with its investors? It comes to me, it permeates my organization all the way into how we lay our space out to work. If you look at the floor plan of our new office space, we're moving our offices in January. We're just down the street from where we are, but we're taking over new space. Super excited. But when you look at the way we've laid out our space is a workflow that's linear. It starts with the intake acquisition process,
right,
which is coupled with legal, and our chief controllers. Because at closing, what you describe as the day everything's going great, we know how we're booking the deal. Then it works its way through project accounting, property accounting, and at the other end of our workflow, the two offices opposite legal are asset management and development management.
There you go.
Right?
That makes perfect sense.
And the deal will reflect from development management and asset management back into property accounting, right? And so we vertically integrate, not necessarily out of a sense of efficiency, but out of a sense of necessity, right? The way we keep control over each aspect of the deal, and it can report accurately to investors and timely to investors, and we know we're handing them the right financial information at the end of the year, whether it's tax reporting or it's at the REIT level, Glenn, quarterly unaudited, annual audited financial statements. It's for us, the necessity of internalizing that and vertically integrating is because it allows us to have control over every element or aspect of the deal. And that's just, it's key in maintaining that trust with the investor base, because we can say to them with conviction, I know the number because we generated the number.
Yeah, that makes great sense. And honestly, that sounds a lot more like the public world that I ran as a chief financial officer. I set up and designed my entire organization to have that flow to it, have that transparency, have that reporting flow, so that you knew when you were coming up on quarterly financials, you knew how and when and what you were reporting. And that was a key aspect, to have that workflow built into the organization. So I really like the way you lay that out. And I think that's true for general partners too. It starts with the underwriting. How are we going to, framework this deal? And then from the underwriting process, as you enter close, now it's the refinements that are happening inside that framework, the refinements for the budget, the refinements for, what can go wrong and what's our backup plan, the refinements for renovation, the refinements for, all of the aspects that relate to everything that's happening financially and physically with that property as you move it through the hold period. So that makes perfect sense, the way you lay that out, even for your organization. I also wanted to bring up one additional component here as it relates to these types of opportunities, and that is, for us, I think a lot of times the tenant is left out of the equation. And yet we know, if I had to lay out my top 3 priorities after close for a property, one of them is revenue management. And so it's critical how you're marketing the property. Do you have the right pricing in that market? Does the market support that? What types of tenants are you looking for? Where are you finding them? And how do you delight those tenants and make sure that not only do they come and sign the lease, they pay their rent and they stay when it's time for renewal. And so that's an important aspect around where there's a lot of movement that happens in the early days of a property closing, where tenants are leaving the building, and you're trying to figure out how am I going to refill these apartments where I had a tenant already and I lost them. And so I think that part of that framework and discipline that builds confidence is knowing, what is your revenue management plan? How are you marketing to these tenants? Where are you finding them? And what we know about a lot of the younger generation today is they don't want to talk to somebody. They want it on their phone. They want to access the lease and access information and do the property tour via electronic means. They don't want to come in and talk to a property manager sitting inside of an office somewhere. And so that makes it a little more difficult. But you have to have that discipline and that portion of the transition of the property from close into your hold period. And so I think that helps to build the confidence as well. I don't know what your thoughts are on that.
Yeah. Look, whether it's multifamily, where each unit is a lease to be maintained and procured, or it's net leases, where you could look at a portfolio of net leases as each one is an apartment in the multifamily portfolio, right? It's a very similar exercise. And I understand that today's renter in a multifamily environment would rather rent their apartment on Amazon because it's a point, click, execute, and I'm done.
That's right.
But a good manager is going to overcome that. It's going to create an experience at the property, is going to enrich the renter's view and really excite the market to want to participate and rent the property, and that speaks to the team you have in place.
Absolutely.
Right? I know you guys have vertically integrated when it comes to multifamily, right? So you're no longer in the market seeking competitive proposals for asset management, certain asset management roles. I know that you have a partner that works with you on it because it's a trusted process.
That's right.
And that's what that's what we're talking about here, right? Why do I have this member of my team and do I consider it part of my vertical integration? Is because they're a trusted member of the organization, and with predictable certainty how they're going to execute their job, right? We used to have an expression when there was a period in my life where I was a construction attorney, and before that I was a project manager for a construction company, and we used to have an expression in high-rise construction in New York City, right? Big builders, big buildings, long drawn-out construction contract negotiations,
Sure.
Hundreds of pages of AIA documents, at the conclusion of which we'd bind the set, put it in a drawer, and my client would say, contracts don't build buildings, people do. It's all about the people. You find the people you trust, you find the people you have good chemistry with, you share common value, common culture, whether it's excellence above all else, whether it's Nike, just do it, right? Whatever your corporate culture is, I seek self-starters that don't need a lot of individual management, or
Absolutely.
I seek people who execute with precision if given the right guidance, right? You've defined your corporate culture,
Right.
your core values. We have as well. When we find people that integrate with those, display our core values every day, those are the people we trust. Those are the people who can operate at the asset level our projects with excellence.
That's right.
And I think that's, so what separates a GP that can attract institutional investment? The ability to show that you've built that type of GP.
Absolutely.
Right? What attracts a limited partner to the deal? When I can see there's longevity with your asset manager, with your leasing team if it's multifamily, with your asset and property management teams if it's retail, if it's a shopping center, whatever it happens to be, I'm seeking that core value set. Is it defined? Do you live it every day? Does your team around you display it in their work? When I see that, it makes trust come naturally.
Yes, absolutely. That's a great way, very articulate way to put everything that you've just laid out. And I like exactly what you're saying, and I agree 100%. I also know that things have changed. I've been talking to institutional investors for 25 years of my career, raising capital. And I'm curious to know how you have seen the relationship with institutional capital and the ability to build trust and earn that trust with institutional capital. How have you seen that change over the last decade? It seems that it's moved into a different place. And I think part of it is that there are so many more opportunities that the basket is full with, inbound portfolio, views and things that need to be done and so on. But I'm curious how you've seen that change over the last decade from your years at ARCTRUST.
I think at its most basic, I think it remains the same, right? I think for all the things we've been discussing, but what I've seen in the last 10 years, Glenn, is I see capital seeking a greater level of specialization and trust.
Interesting.
Trust is starting with show me your discipline in avoiding style drift. So more and more, it seems like institutional capital is seeking subject matter experts. The days of we're smart real estate investors, show us an opportunity and we'll put our overalls on and go fashion it into return. Those days, it seems, are being replaced by show me your subject matter expertise in taking former hospitality buildings and converting them into micro-residential units on a one-for-one basis, executing in exactly 18 months, stabilizing at exactly month 36, and exiting via a refinance or a sale of the asset no later than 60 months, right? Don't show me that you know retail.
Right.
Don't show me that you can do garden apartments. Show me your ability to convert hotels, Glenn, right? That seems to me to be one of the biggest changes I've seen in the market for institutional capital over the last 10 years, is the demand for subject matter expertise and specialization.
That makes a lot of sense. And, some of the things that I've heard along that line from institutional investors and family offices, and I think this is, part and parcel with the amount of deal flow that's being, reviewed at these institutional levels. They are looking for things that are repeatable, things that you can, it just can keep.
Wash, rinse, repeat.
Right. Wash, rinse, repeat. Good way to say it. And I think that that has a lot to do with the volume of things that they're looking at. And so they, instead of, doing a one-off that makes a lot of sense, why not do a whole bunch of wash, rinse, repeat type of, situations. I also think about the medical community too, and how it used to be that years ago when I was a young man, there were generalist doctors who pretty much handled everything, right?
Yep.
And now everything is so specialized, and some of that's driven by other factors like insurance and malpractice insurance and so on. But that's happening in the institutional capital environment too. This specialization, this special subject matter experts, and then anything that I can put in now, but also see that I can do it again and again and again and again. And we build the expertise around the repeatability of what's happening there. I think that's where the medical community has gone too.
Yeah.
And it makes a lot of sense. If you're
Sure.
going to specialize, you have a deeper knowledge in that particular area. And we all trust, cardiologists who can, do certain things, and brain surgeons and, neurosurgeons and so on that can handle various specialties. And I think that's happening in the capital markets too. And I think that's a very astute pickup on your part that is a big change that's happened there. I see it.
But it creates a risk to the LP, right?
That's right.
I don't know in the end it's going to be the more efficient generator of returns.
Right.
Because we opened up this conversation talking about how character is displayed often when things go wrong.
That's right.
Character is assumed when things go well, but it's displayed when things go wrong.
Right.
If you are a subject matter expertise without the creativity or flexibility to create opportunity from controversy, you may actually not produce the best outcome for the capital.
I think that's right.
So I think as a generalist, somebody whose platform has built 40 years of real estate investing, as it says on the sign, we are as advertised. I think there's an advantage to capital seeking a more broad range of discipline, especially in uncertain economic times when you don't know what's going to happen with a tariff, or you don't know what's going to happen with a tax policy, cross-border transaction policy. All of these things impact the business plan, and you got to have a GP that's got the flexibility to deal with it.
That's right. That's right. Absolutely. Gary, any last thoughts that you would like to have the listeners know about as we wrap up our session 1 of our informational real estate podcasts?
Maybe I'd turn the table on you for a minute and just ask you to share a little bit of the experience of Preceptis, and when you built the platform, how it has evolved over time for you in your quest to seek trust and confidence in your investing partners.
That's a great question. So for Preceptis, we started the platform with a very open mind. We decided that it was really important for us to understand the inner workings of the institutional and family office, capital, and the mindset and what it was that they were looking for. And so we built our platform around a framework that was essentially institutional in nature. We had seen a lot of general partnerships out there running 30 carry, which isn't market really. It works great for retail investors who don't know what's market. We know that the institutional investors, 20 carries typically market. We set up our framework around a preferred return that was a true preferred, much like I dealt with in the venture capital world when I was in the biotech sector as a chief financial officer. And so we built the framework around how investors are thinking about return, and then also understood more deeply how investors are thinking about the total returns on certain types of projects. And so we use that to create our disciplined buy box, where we underwrite about 50 properties before we get to one single letter of intent. And that's just the discipline that was instilled in our platform from talking to family offices and talking to institutional capital and understanding how they were thinking about things, so that when we took properties to them, they had the ability to say, okay, it ticks the boxes on the front end. Let us go deeper and take a look at it. We run a fully transparent model around our underwriting model as well. We share that openly. A lot of groups don't do that, and we felt that was something that builds the trust on the front end, and it allows them to really dig in with their analysts to understand what's happening in the deal, and allows them to ask the right questions and come out with a set of answers that gets them comfortable with the particular property. And so that was really how we built the platform from the very beginning, was having their mindset built into what it is we're doing. And I think that was something I learned many years ago at GE Capital with the Six Sigma, where you start with the end in mind and you use the voice of the customer to build whatever it is you're trying to build. And so that's how we set up our general partnership from the very get-go.
Yeah, and just listening to how you describe the construction of Preceptis, the moment of trust inspired in me was when you said we look at 50 deals to get to an LOI.
Yeah.
Right? I trust anybody who looks at 50 deals to get to an LOI.
Right.
Right? Six Sigma, approach it from the customer's perspective.
That's right.
At ARCTRUST, we are very similar in that regard. So there's a shared system of values that exist between our organizations, right? We're always looking at things through the lens of the investor, right? Don't tell them what they want to hear. Tell them what they need to know.
Right.
It's part of the reporting and transparency process.
Right.
Right. And so building trust, obtaining confidence is part of the process of how we approach investments. It's how we approach our investors. It's how we understand our stakeholders, right? Tenants, as we talked about, the people raising capital. For us, it's the broker-dealer community. It could be family offices. It can be our high net worth investors, right? And then also our joint venture sponsors, those who have repeat development relationships with tenants, right? All of these people are our stakeholders. We put ourselves in their shoes. We have for 40 years. We've been responsible for over 500 transactions, aggregating at over $5 billion in real estate in that 40 years.
It's right? Fantastic.
We didn't do it guessing.
That's right.
and we didn't do it on a hunch, right? We did it with discipline. We did it with clear communication, shared value systems, building trust and confidence, and executing flawlessly.
That's fantastic. Gary, I'm sure glad we had a chance to talk
Thanks
today.
so much for having me.
And I look forward to our next podcast that we'll do, and we'll pick up another key subject in this area. And so
I look forward to it. Thanks so much, Glenn.
Thank you very much.
Okay.